Alright, what's going on, guys? My stock market bulls and bears. I'm your host, Terry Z. Welcome to the channel, Buy the Dip. Alright, guys, and in today's video, we're going to do a little update on my favorite stock, Lantcadia Holdings, LCA, soon to be GNOG. And I wanted to read this new article that was just published yesterday. So on Investor Place, an editor by the name of Thomas Neal did an article yesterday. And I wanted to read this article to you guys and get your opinion on it. As you guys know, I am very bullish on LCA GNOG, like I have a good bit of money in here. But it's kind of nice to hear other opinions of what people think of the stock. In order to be a good investor, you have to hear both sides. You got to listen to people that think the stock is good, and you got to listen to people that think the stock is bad. And once you put all that together, you decide, is it a good purchase or not? And it's nice to be open, not get offended by people's opinions. So let's read this. Is Lantcadia Holdings, LCA, stock the next DraftKings? And then saying like DraftKings stock, not so fast. After seeing shares in the sports book powerhouse skyrocket following its SPAC merger, those who missed out may be jumping into this name for similar potential gains. But just because it quacks like a duck doesn't mean it's a duck. That is to say, yes, LCA, partner Golden Nugget Online Gaming, is an online gambling company, yet it is not the same league as its larger rivals. Not only that, motivations behind the SPAC deal should give investors caution, but the cash-strapped billionaire, the key player behind the scenes, do you really want to be buying what presumably the smart money is selling? Granted, given the massive runaway for this budding industry, even buying a weekend play like LCA could mean big gains. But after rallying from 10 a share up to around 18, there may not be much left in the tank. So what's the call here? Those who bought in at lower prices to sell into the strength, otherwise stay clear from now. So this guy is pretty much, in my opinion, you guys can comment down below, but he doesn't think that it's similar to DraftKings, and it doesn't sound like to me that he thinks this stock is going to go above $18. That's just how I'm reading it and how I'm taking it. So what do you guys think? Now, my personal opinion, I think this guy is completely wrong. And I understand, like, yes, he's a kind of similar to DraftKings, but it's honestly more because there's actually not only sports betting with Golden Nugget, but you can actually do slot machines, table games like roulette, blackjack, craps, all the other card games, 3-card poker. And this is a company that doesn't require a lot of overhead, I guess you would say. It's just like kind of like one building, and they have people in there in a live studio doing stuff. So it ain't like you have, a lot of buildings. So I don't know. Let's keep reading on. Let's see what it says. So then it says this topic here is LCA stock is different. With trends on its side, high investor demand, is tough to be bearish online gambling stock. Yet it is important to keep in mind Lantcadia is different from other plays in the sector. Namely, the rise in legal sports betting isn't the key catalyst here that makes it different from DraftKings, along the names of FanDuel and Penn National, which could quickly dominate the market with its Barstool sports book app. Instead, GNOG is focused on online casino or iGaming space, yet don't take that difference to mean a negative. Based on the results of the New Jersey, the company could be crushing it in this segment, the overall online gambling space, and planned expansion into Michigan and Pennsylvania can meet continued growth in its cards. Speaking of growth, calling the growth story is an understatement. Last quarter, revenue soared 85% year over year. Operating income soared 74% to the prior year's quarter. Yet that doesn't mean another epic run for the stock here. As our own Todd Schrober wrote on the 21st, just a handful of states have internet casinos, and online sportsbook legalization is moving along much rapidly. This could take GNOG expansion. Perspectives aren't high as investors participate. Also, the legal legacy casinos like MGM and Caesars Palace have size and scale. If they choose to fully jump into iGaming, Golden Nugget could face competitive challenges if it tries to scale up. Yet again, underlying fundamentals of GNOG and its operational business, there is another red flag. Consider why is this company merging with Lancadia, who is behind the deal. So again, sounds like, they're trying to compare it to DraftKings, FanDuel, and yeah, I mean, all the casinos, I'm sure if they realize that Golden Nugget is making a killing in iGaming, why wouldn't they follow suit? That's just like Coke and Pepsi. If one's selling a lot of Coke, why isn't Pepsi going to try to sell theirs too? Competition is always good, because it's either going to make or break a company. So if, say, another casino jumps into the iGaming, that's only going to make Golden Nugget either grow or crack. So in my opinion, competition is good. Competition is a good thing. So, and if we go here, suspect motivations for the Golden Nugget deal, as our own Matt McCall detailed earlier this month. The upcoming deal could be a little more than a billionaire bailout. How so? It is important to note that the co-sponsor of the SPAC was Tillman Fertitta. Fertitta is a billionaire entrepreneur whose holdings in restaurant chains, the Golden Nugget casino business, as well as the ownership of the Houston Rockets NBA team. But with the novel virus decimating his empire, Fertitta faced big cash crunch earlier this year. He borrowed $300 million at steep interest rates to keep his desperate businesses afloat. However, the hospitality found out from his troubles. By selling his online gaming business to the SPAC, co-sponsored Lancadia, not only to pay off the remaining liabilities, the billionaire will receive a $30 million transaction fee. This is not to say investors are buying a lemon when they buy the LCA stock, yet there should be some concerns, presumably as smart money is selling. With dynamic play, there are plenty of reasons why the online gaming play so far is not a sure thing. So basically they're saying, because Tillman owned, if you all don't know this, Tillman owned LCA, Tillman owns GNOG. So basically he owns one SPAC and he's making it another SPAC stock. So he's buying and selling of the same. But if I look at it this way, like, that's only a smart business move. If you can use something that you own and make money off of it, why wouldn't you want to make money in the process? Like, yeah, his restaurants and things like that are hurting, but this is a business here that, with the online gaming, could basically never go under unless if there was like something with tech where things fell down and tech couldn't, if there was an internet crash, that would hurt it. But no virus is going to keep online gambling down. I mean, like I said, this could be something done at people's houses. Like, you could be in a room and have, like, the casino could give you like a roulette table at your home and do it at home. For like the workers now, if you were an employee, they could give you stuff to do that at home at certain times. So, I mean, this is pretty much, like I said, if there's not a virus crash, internet crash, then I don't think that this stock has anything to worry with. So then going here forward, simply put, Lancadia is not the next DraftKings, but it doesn't have to produce outsized returns by investors. By focusing on its efforts on its iGaming niche, it can build significant business while the crowded sportsbook field gets more competitive. Yet not to say smooth sailing for GNOG and LCA, limited runaway, increased iGaming competition could sink the shares at will. And in deal, it may benefit billionaire, so that rank and file shareholders, it's clear selling into the strength is the way to go. And those who haven't bought yet, wait for a pullback before buying. So that there was an article. I'll tell you, this is the first video I ever put out where I read an article that was kind of on the negative side of LCA GNOG. So I wanted to kind of get you guys to listen to this. Give me your opinion down below. What do you think of this? Are they right? Are they wrong? Wall Street is they're always not right. They're always wrong about a lot of things. Look at Tesla. They were definitely wrong about Tesla. As you can see today, I'm going to say first, congratulations to anyone that bought LCA at like $13 today, because you got a good deal. And if you bought anywhere in the 13s up to the 14s, I mean, honestly, this stock, anything under 15, in my opinion, is like a great buy. That's just my opinion. Anything under 15, you're going to make money, I believe. Now, my personal opinion, I think this stock is just going to keep growing, guys. But like I said, I was open enough to read the article, put it out here to you guys, that article. And like I said, my opinion is I'm gonna ride this stock up to like $30 or $35 and sell off some, maybe hope for a little dip and buy back in. But right now I'm gonna hold my shares until they hit $30 or something and make that decision at that point, depending on the news that comes out. So alright guys, comment down below, tell me your thoughts and opinions, and I'll catch you in the next one. And remember, buy the dip.